All right, so let's talk through Wednesday low profiles. And I'm going to use NQ on this one. So let's see how I can get this. So framing for any weekly profile study, got to have Monday's range, the new week opening gap, and the previous day's range. So we're going to jump back to the week of September 28th, and the framing of the week right now is this Wednesday low. So price started off the week on Monday. We have a Wednesday low profile. And if you studied any of ICT's intra-week or weekly profiles, excuse me, you'll know that a Wednesday low typically will demand that price goes higher for the remainder of the week. So we're going to incorporate the must-haves to frame how far could price go. So on the face of it, if we don't have our must-haves, we would look at this price action on an hourly chart and we would be able to quickly identify these relative equal highs. And we would note that as some form of buy side. We would also, on a daily chart, could see that we are dipping back into a fair value gap, and we might be tempted to set, or we would really look at this daily buy side, the past or this intermediate high here as the time that price would hit. So we'd have all of these levels, relative equal highs here, which we can see within the week. We have Tuesday's high, now trading on Thursday, we would see Wednesday's high, and then potentially getting back up into these daily levels, the swing highs here and above. So using the must-haves and framing our week with the logic that a weekly profile is going to need or demand better framing than just where we are on the low of the week, we will see that as price plays through Thursday to Friday, it wicks, barely wicks that daily buy side, but it fails to push higher. In fact, as we get through to Friday, we would want on a Wednesday low profile to see price completely pushing higher. And so just to be clear on that Wednesday low profile, that's this profile here, where we would frame the week from Monday. We have a high on Tuesday, we make a low of the week on Wednesday, and we're expecting bullish price action from Wednesday through to Friday, effectively clearing all of that liquidity. And we're going to look at this profile, which is true, it is a Wednesday low. But as we frame out the rest of this week, understanding the news events, let's understand what happened here and why is it that price through to the market close on Friday, why was it bullish but not bullish above these relative equal highs? So we're going to frame our week with our must-haves. We've got our new week opening gap. We're going to frame up previous days highs and lows, and we're also going to add our Monday range. Back of our mind, we see that we have a core PCE event 8:30 on Friday. Last news event is 10 o'clock. And Thursday, preliminary GDP was at 8:30, and we have a news event at 10 o'clock. So after 10 is where we would frame most of our trades based on the news events being done. So let's drop in that Monday range. So we're going to take the high and low between midnight. And now we have a little bit better framing as to what or why was price failing to get higher than these relative equal highs. We can see that even though we had a Wednesday low of the week, we were also capping ourselves with a Monday high. So the Monday's range will act as a level of fair value or fair balanced price. And if price does not get above Monday's high, then the remainder of the week cannot be definitively called bullish. So in fact, we can see that the week opened here and ended here. So technically, it would be considered a bearish week, with the open and the close relatively around the same area, but we can see that the open was higher than where the close was. So technically speaking, this was a bearish week, even though we had a bullish market structure sentiment with a Wednesday low. And we can see that these relative equal highs, another element that was holding price back was the midpoint of Monday, which, no surprise, after 10 o'clock, which we said after 10 on Thursday and after 10 on Friday, we would expect to see our move play out. So let's dig into this. We get that Wednesday low. At the point that we see price return into Monday's range, we're looking for price action between the low and the midpoint and the high. We're using news events as our algorithmic timing, waiting for those news events to pass so we know we've got 10 o'clock. So in our mind, we're anticipating price to work within Monday's range, and with the new week opening gap and the previous day's range, we can frame our intraday profile. So the new week opening gap acts as a bookmark. If price is bearish, we should stay below. If price is bullish, we should stay above this bookmark. And this bookmark is relevant for the week. We're remaining below the new week opening gap. We have a timed based activity. So the news event was at 10. We're looking for price action after 10. And we're taking the relevant information of the regular trading hours. So let's plot previous day's range, high and low. We can see that we just wick above high. And so the daily buy side liquidity is barely engaged. And using the previous day's high logic, we're going to go down to our 5-minute and 1-minute charts for Thursday. So here we are on Thursday. The market opens up with a bang, 9:30. We are seeing that if we're back inside the Monday range low, which is the gray line, we're using that information to help frame where we could go next, which would be the Monday midpoint. And the relevance of all of that is to say, until we break the high, we are going to stay with a bearish narrative of the week. And the reason why we have the Monday range is so that we can help frame that overall bearish, that overall weekly narrative. So one, we get back inside of Monday's range. It's okay to be bullish going into or up to the Monday midpoint. Two, we've got the previous day's range and the new week opening gap helping to frame. Three, we can see a sweep of that range, previous day's range. So when we return to it, we're expecting to see bearishness going from one end of the range, previous day's range high, down to the other end of the previous day's range low. That's our narrative. So we're using that to say that is where we're having our draw on liquidity. So we see that price action plays out on the larger time frame here. We revisit the previous day's high range here. We float all the way down on the 1-minute chart. This is a different contract, so that's not going to work. We would have seen the first presentation fair value gap here, which gets revisited right around the Monday range low on a 1-minute chart, and that helps to frame the rest of the push down on the PM session. So the setup is to say we have a bearish overall weekly profile because the Monday range is helping to define when we are bullish. If we had crossed Monday's high, the weekly profile would be a bullish profile, but because we were capped by the midpoint, we would remain bearish. We have a mechanical reason to want to see a bullish run, but because of not passing the midpoint of Monday's range, that gets capped. We go into Friday and we have the same news events until 10. We can see the same structure is playing out. Once we have a candle close back into Monday's range, we'll be bullish. Then we'll use the 10 o'clock news events to help frame the rest of the week. So we have the same intent or same direction here. So we have a 9:30 open. We can see that as we got back into Monday's range on the overnight session, we ran up, couldn't even get to the midpoint. We start to fail. We get back below Monday's range low, so we're looking for bearish price action. We can take a bearish play here. Again, we've got mechanical reason to have a bullish sentiment, but we have a weekly mechanical reason to be tempered in our expectations of bullish runs. So as price closes below, we're bearish. We see our market structure shift. We're waiting. We see price close back above Monday's range. We can now switch our sentiment to bullish, but understanding that it's going to be capped or tempered. So we're not looking for this to fly to the heavens. We're below the new week opening gap. We're below Monday's mid, and we're certainly below Monday's high. So while we can still take a bullish run, we would only look for internal liquidity, not external liquidity. So that's one example of the weekly profile. So the must-haves for any weekly profile study are going to be Monday's range, the new week opening gap, and the previous day's range. The limitations of this model is that this back half of the week you have a lot more confidence in your setups. So here we have another weekly profile. It's obviously a bearish setup. We have the new week opening gap all the way up here, and Tuesday PM, Wednesday PM, we can use that information to then frame the back half of the week. So we've already got sentiment to be bearish. So any bullish runs, we would be very suspect of them. So let's plot Monday's range. So fairly easy read. We break below Monday's range, we revisit the low, and then we are aggressively bearish. We framed our bearish move. Our news event on this day, on this week is, just find that here. So on this week, our news events are heavy Thursday, 8:15 until 11 a.m. and then Friday up until 11 a.m. So we're looking for setups after 11 on Thursday and after 11 on Friday. So 11 a.m. 11 a.m. So what we have here is we have our bearish setup. We see we've revisited Monday's range low, aggressive rundown on Tuesday. We're waiting for Wednesday, which will set that narrative for the back half of the week, 10 a.m. jolts. We'll let that event play out. And now we're going to use the previous day's range to frame setups. So here we have Thursday's high and low. Fairly easy read. We sweep the high, we revisit the high, we go down on a 5 minutes. So we've already got the narrative shift here. We see a sweep above the high. We close below the high of the previous day. Entries will be around that level. We're looking for highs to be maintained and then lows to be taken. So all of our structural integrity from this bullish run is now invalidated when we are back within that previous day's range, and our intention is to get back down to the other side of the range. So we use that as our framing. That's our narrative. In the PM, we come back up, we touch back into some liquidity, and the rest of the PM, even though it's I would call this a consolidation, you can see that there are opportunities to get these bearish plays, and we would maintain that bias for that week. We go into Thursday, we do the same thing. We're taking the high and low of the previous day's range. And I wanted to highlight this particular setup so we know that our news events are at 11, but we can start to get a framing of the bias here. So we see price run up. We're waiting for after 11. we would see that once price breaks that previous day's range low with a close, we're looking for opportunities in and around that level. So as that candle closes back below after 9:30, we revisit that level with this wick, start to see highs getting respected, lows getting invalidated, and as price rams down on that news event, we have a small spike up, whether we're going to stay bearish on the here, because what we've got is this previous day high and low being broken in regular trading hours. Now here's another cool thing. As with any PD array, you can always use the midpoints. So as price wicks that midpoint right there going into the start of the regular trading hours, 9:30 already moves aggressively lower, but the framing of the week gets confirmed on levels like this. So going down on a lower time frame, understanding that you're still waiting for 11, and that's okay. I mean, this might give you enough of a run, but if you're looking for something earlier, you can frame it off of these levels of the previous day. And it all starts by having your weekly bias in play. One more. So here we have a profile. This is obviously a bullish run from Monday through to Friday. But we're going to use the information to set Monday's range. We already have the new week opening gap defining our levels as a bookmark. You can see prices coming back to it, coming back to it, coming back to it, and then taking off on Wednesday. So let's set up our Monday range high and low. What we see is as price, we forego Monday trading. We break above, we come back to the midpoint. We break above, so highs are being taken. Whenever we have a Monday low profile, one of the signatures is we're looking for internal liquidity to be taken at the midpoint or half of the day on Wednesday. So when internal liquidity gets taken, but external liquidity is maintained, meaning that the Monday low is still held, this bearish run is likely to reverse. So as price clears the midpoint of Monday down on a lower time frame, I'm sure we're going to be able to see how that swing, that shift happened. So let's look at a 15. On this week, the main news event was started on Wednesday, 8:30 CPI. So we have a CPI protocol, 10:30 news, bond auction play on Thursday, and then Friday 10 o'clock news. So we can see that the CPI event ran up, 9:30 open ran down, took internal liquidity, maintained the Monday low, and as the price shifted back through Monday's high, we revisit the high on this wick, and then we continue our bullish direction because we are not looking at this leg as a retracement of a bearish move. We're seeing this as a reversal. It was actually, this bearish leg was actually the retracement of a bullish narrative, not this bullish leg a retracement of a bearish narrative. So as price closes, again, regular trading hours are going to be the key. We get the 9:30 open. We see after the 9:30 open, damage is done to the midpoint of Monday's low, understanding that internal liquidity is the target, maintaining the Monday low, reversing, clearing Monday's high, revisiting Monday's high as a typical range play, and then working the 9:30 open to then expand higher. Next events are on Thursday and Friday. So we've got bond auction play. So we're looking for a late PM setup on Thursday, but we can use Friday at 10 o'clock. And the interesting thing with a Monday low is Thursday's range is going to be very defining for Friday's price action. So we're expecting price to stay within Thursday's range. The only time that changes is if we see a range break, then we're going to revisit that range for a bullish opportunity. So it's the same basic range setups. Again, framing our week off of the Monday low, the new week gap being the bookmark throughout the entire week. We're staying bullish of it. We see this big bullish run on Wednesday. all explainable with the Monday range, then we're using every previous day's range high and low to help us determine the next play. So taking a bullish run on Friday when we have taken Thursday's high is high probability. So what that means is there is no such thing as a Friday high of the week profile. So if price starts to close above Thursday's range high, then it will maintain that direction through Friday. Not saying that there aren't scalping opportunities to go lower, but you can see any bearish play simply comes back to the range high of Thursday and then continues to take the next high. So it's not that there aren't any bearish plays, it's just that the stronger dynamic is going to be in the bullish direction. So order blocks will hold even if they go fairly deep. Previous day levels will hold, and then they will take range highs. Not to say that there aren't bearish plays, but the strong momentum is gonna, you'll have favorability going bullish to take highs, whereas bearish setups may not take lows. These bearish setups here after the 930 open are not sweeping the 930 low. They're going to take the highs. Generally speaking, that's the momentum play. All right, last one, and that will be it for today, is this following week. And I thought this was really a good one because it showcases the importance of the new week opening gap. So we've got this range, and we can see from Monday through to Friday, it's generally bullish, right? But there was a lot of price action working its way through here. What would have helped to tell that this would not continue bearish? So specifically when we're at this point of the week, so the Wednesday midpoint, a very key time and day when using a Monday range. So let's plot our Monday range high and low. And the dynamic of a Monday low of the week profile is that Wednesday will take internal liquidity but fail to take external liquidity. So on that Wednesday midpoint, even if you're in a bearish move, you're looking on that hourly chart for internal liquidity of the week. So that means Monday's range is going to be what's helping you to determine what's external. And if price takes internal but fails to take external liquidity off of Monday's low, so this level here is not taken. If that is not taken, then generally speaking, you will not have a bearish week. So this week is consolidating. Let's go down on the 15-minute. So the main news events for this week. On Wednesday, we've got 2 p.m. Fed, so that's definitely going to set the narrative of the week, this FOMC meeting, 2:30 minutes. So we've got a protocol for FOMC. And then Thursday through Friday, news events are done at 10 a.m. and 2 p.m. respectively. So on Wednesday, we're letting FOMC play out. We've got all of this movement here from 2 o'clock to 2:30. We're looking for internal range liquidity to be taken. And we're watching very closely if external range liquidity is taken. If it's not taken, if Monday's low is not taken, then that's an indication that we're going to be bullish. So let's come out of replay mode and see what happened on this week. So here we have internal range liquidity taken. External is defended on Monday's low. As we clear back through the midpoint, we revisit Monday's midpoint. We're sweeping the high. Once we get a candle close above Monday's high, we have a revisit of Monday's high range, Monday's range high, and then we continue to swing higher. So on Thursday, we're going to use previous day's range, high to low. You can see in the London, we revisit the high of the previous day's range. Even here, we're coming back to it and we're just looking for lows to be defended. So this low is defended, we revisit, we break again, we revisit, we push all the way higher. Now Thursday, we have news at 10 and 8:30. So if we are looking at anything and we're considering a bearish setup, we are just simply tempering our expectations, understanding that we are in a generally bullish profile. So here we have Thursday's play, 10:30, 10. So news event is at 10. So we see we have a bullish push. We're expecting that bullishness. We have a play off of a lunch range here, which is breaking the high of the lunch range and then coming back into it. But we're tempering expectations. Even if we are seeing a bearish setup, just temper expectations that you may not be seeing a reversal. This would not be considered a Thursday high because we're above the new week gap, we're above Monday's range high, we're above the previous day high. There's a lot of sentiment that's bullish. Not that there are no bearish setups, but you're just tempering expectations. On Friday, we'll use Thursday's high, low, and in this case, like I was saying in the previous video, when you have a Monday low, Friday will typically work off of TGIF levels and internal liquidity. You are not looking for something to be continuous unless it is taking Thursday's range. So in the previous week's example, where we saw price clear Thursday's range, then you can use that for high probability runs. But when you are not clearing Thursday's range, you're not close to it, you're not breaking it, you're only looking at internal range liquidity plays. The internal range liquidity plays just means you're taking any other swing high or low within Thursday's previous day's range, and that's your targets. So you can see internal range is taken as a target, but not external to the previous day's low. Internal range is taken on this bullish run to these relative equal highs, but not the previous day's high. And so you're going to stay internal and you'll just work your intraday profiles. So the intent here is to just work the weekly profile to build a narrative for the week. What's my sentiment? What's my draw? Where is my draw? And I'm using things like Monday's range, new week opening gap, and then the previous day's range. Take your news events to frame your time-based activity and use your previous day highs and lows to base your price-based activity. When will I act? Time. Where will I act is the price. All right. Do it again later.